Amazing AI is a global fintech group with a digital asset treasury policy that provides online consumer loans and AI finance related services. It has implemented a crypto treasury policy and this week made its initial purchase of digital assets within that digital asset treasury. To talk more about that and the business case, I'm delighted to be joined by the founder and chief executive, Paul Mathieson. So, Paul, the investor update describes the purchase as small and non-material. So, is it worth discussing it in this interview? And what's taken so long as this purchase was flagged up months ago?
Sure. So great to be back again talking to you. So the purchase was flagged months ago, but we took a view that we thought there'd be a correction in the crypto and digital asset space, which proved to be correct. So Bitcoin peaked at around 125,000 US. A number of investors were pushing buy, implement the strategy, but we held back, and we've now made our first purchase at basically 3-4 month lows, which we think is an attractive level. We're going to be dollar cost averaging rapidly into the position. So we had to test the plumbing, make sure everything works. There's no point buying, a heap of crypto assets and not making sure you have all the ducks in a row and systems in place and custodians and everything else. So we've made our first non-material purchase, but we'll be rapidly on a daily basis, dollar cost averaging into a much larger position. As we've said in the RNS, by the end of December, we expect to fully deploy our current capital into our diversified basket over 5 crypto assets.
Okay, so let's unpick that a bit. So, in layman's terms, please explain how you will dollar cost average your position daily. By what mechanism?
So, in essence, we'll be undertaking daily purchases now that everything's set up. So it's the system. It's very easy at any point, any time of the day, 24/7. We can be now purchasing and increasing our position. So we think it's prudent rather than going in all at once. As I said, if we'd gone in all at once a month ago, we would have been at the peak and we would have lost, up to 50% on our position, as opposed to today where we've made our first acquisition at close to 3-month lows. So investors and the company's in a much better position by doing this strategy.
So the update talks about providing greater upside whilst insulating from downside exposure, which you've just touched on there. So how would you describe the current digital asset market? Is it still a bit frothy? Are we in the territory of it being a bubble?
So in terms of the treasury companies, there has been a bit of a bubble. I think people have worked out that just raising equity, buying a basic position over Bitcoin is not a strategy that makes a lot of sense. Anyone can go out and buy some basic Bitcoin, but our strategy is over a basket of diversified assets, and we're taking positions that enable us to leverage or increase the upside up to 100 times the exposure, and also protect on the downside if Bitcoin and other crypto assets to fall away. So we think while there's been a bit of a bubble in the treasury space, we're very strong believers in the medium-term performance or ongoing outperformance of crypto assets.
So talk to me about that pathway to get to that 100 times.
Sure. So in essence, we were able to buy call options over the digital assets that enable us for 1% of the cost to get 100 times the exposure. So we have exposure to call options over Bitcoin, for instance, that enables us to lock in a price of 220,000 and 320,000 over the medium term. So if Bitcoin was to go to $1 million over the medium term, instead of having exposure to one Bitcoin for every dollar spent, we have exposure to 100 times that, utilizing sophisticated strategies in the option market. On the downside, we protect ourselves by buying 60,000 price level put options. So if Bitcoin fell below 60,000 over the medium term, then we would make money as well. So under our strategy, the only way we would lose money is if the underlying digital asset stayed flat and there was no volatility over the medium term. So our strategy is all about taking advantage of volatility, and we diversify that over 5 different digital assets. So we would only need one of the 5 to go, up a decent amount or down a decent amount to make money. So we think our strategy is much more advanced than a simple raise money, buy Bitcoin and hope for the best.
Okay, and I know part of the strategy is to seek acquisition opportunities of weaker players in the digital asset treasury sector. Are there many out there, and are any listed? Or you're not able to say?
Yeah. So we probably don't want to bash our competitors too much in the space, but the competitors are very well known. So you have companies out there that were doing businesses that are totally unrelated to finance or the crypto space or the digital asset space. So you have companies that make websites or do consulting work or a variety of different things. Whereas our business is all about financial services and very correlated to this space. So the stock exchanges around the world have recently brought out new rules that mean that companies to remain listed in the digital asset treasury space need to have proportionate businesses to that new side of their business. So that in essence means that if you don't have a core business that's attractive, that can generate around 50% of the revenue of the group or has 50% of the assets, then the stock exchanges don't want you to remain listed. So we think a lot of our competitors in the space are at great risk of being delisted because they don't meet that requirement. And we think it would be very hard, for instance, to ramp up a business making websites to be able to generate a couple of $100 million of profits or have a couple of $100 million in assets, as opposed to our core business of lending. We can very proportionately distribute capital to where, if we raised or had 10 million of capital, we could put 5 million into lending out at 60% interest rates, and we could have 5 million deployed into our sophisticated treasury strategy.
That was going to be my final question, actually, Paul. Remind investors about the lending side of the business and how this will grow the company and make shareholders decent returns.
Yeah, so we believe it's a great blend of having a core business that's generating high gross returns of 60% per annum on its loan portfolio, netting around 30% after all costs of finance, bad debts, and so forth. And combining that with a sophisticated low capital requirement treasury strategy where we're able to have 100 times exposure of a normal treasury company. So combining those two things together, we think is a very attractive proposition to shareholders and myself as the biggest shareholder.
Many thanks, Paul Mathieson, founder and chief executive of Amazing AI. Thank you very much indeed.
Thank you.